And we begin Fast Money tonight with another big story out of the White House today, trade war relief. This is what Wall Street had been waiting for. The Dow surging nearly 500 points at the highs, ending up nearly 300 points as President Trump and President Xi agreed to a 90-day truce, which technically starts on January 1st. And that seemed to be enough for Wall Street, at least for now. For more on what this all means, let's get to Elon Moy in Washington, D.C. for the details. Elon.
Well, Melissa, the grand compromise coming out of the G20 is fewer tariffs and more talk. The U.S. has agreed to hold off on raising tariffs to 25% on $200 billion in Chinese goods. Those are going to stay at 10% while the two sides keep talking. Now, the Chinese have 90 days to come up with major concessions on issues such as forced technology transfers, IP theft, and other issues. That countdown clock starts on January 1st.
They put on the table an offer of over $1.2 trillion in additional commitments, but the details of that still need to be negotiated. But these are big numbers. But I want to emphasize, this isn't just about buying things. This is about opening up markets to U.S. companies and protecting U.S. technology. Those are very important structural issues to the president.
Now, that was Treasury Secretary Steven Mnuchin speaking on CNBC earlier today. Still a lot of questions, though, over exactly what was agreed to. President Trump had tweeted that China would get rid of its tariffs on U.S. autos. However, the White House said that that could actually start today, but China made no mention of getting rid of those tariffs on U.S. autos in its official statements. Meanwhile, the sleeper issue could wind up being the USMCA. On the plane back from Argentina, President Trump said that he would withdraw from NAFTA in order to force a vote on the USMCA in Congress. Melissa, Trump needs to give written notice to both Canada and Mexico in order to pull out of the deal. He would have to give that notice 6 months in advance of any withdrawal. We'll let you know if we see any sort of official statement. Melissa, back over to you.
Elon, there's also some more confusion regarding the differences in the Chinese statement and what the U.S. has said, and even differences within the administration from the statement that was initially given and what Larry Kudlow, for instance, said on a conference call with reporters. For instance, on the amount of goods that China would purchase from the United States, in the Chinese statement, there's no mention of a dollar amount. And Larry Kudlow seemed to say that there was a ballpark trillion-dollar figure with no time frame. I mean, it's interesting how some of these details just there really aren't details at all.
Well, there are certainly different interpretations then of what was agreed to. You heard also Secretary Mnuchin saying that on our air, that $1.2 trillion number. Also, we heard from Peter Navarro, who said that 142 separate points were brought by the U.S. And that China agreed to many of them. So as we sort of sort out exactly what the particulars of this arrangement are, I think that's going to be what's critical going forward. All along, it seems like both China and the U.S. have been operating from different playbooks. We'll see if now they are on the same page, if now they can come to an agreement within these next 90 days, or if the two sides keep talking past each other.
All right, Elon, thank you. Elon Moy in Washington. So Fed fears and trade woes seem to be in the rearview mirror, at least for now. Is the year-end rally back on? Is Santa Claus coming to town, Guy Adami?
No. How many? What do we got? How many? What's today?
Actually, I don't know. I lost count.
Don't go Grinch on us now, Guy. It's a happy day.
Yeah,
Come on. It's early in the Christmas season. You can get a little.
What day is Christmas?
Don't be Grinchy, though.
It's on a Tuesday.
It is.
Yeah, it's on 25th.
So
it's a Santa Claus rally on. So last week, for most of the week, we said, look, President Trump is laser focused on the stock market going higher. They will come out of this weekend with some sort of handshake, some sort of a deal in principle to move forward. The market would rally on Monday. I bet you, though, if you put a lie detector on Mr. Kudlow or President Trump and asked them what the market would do today, they probably thought it would be a multiple of what we had. Maybe a lot of the rally was done on Thursday and Friday. But to answer your question, short of something disastrous happening, the seasonality suggests the market's probably going to continue to grind higher.
I thought today was the base case. I didn't think the market should have rallied. I thought this was base case coming out of it. I thought last week any pop in the market should be sold. We failed right at the 100-day moving average. We failed where we failed October and November. I still think it's a sell. I don't think anything really has changed.
Yeah. What do you think?
Well, I actually am encouraged for the market's sake that you didn't see a 2 to 3% move in the S&P. I'm very disappointed in the bond market. And if you look at the 10-year, we actually went from 206, 207 to finishing down at 297, 306, 307, finishing down at 297. And you actually had some inversion in the curve from 3 to 5 years. I don't want to get too crazy into yield curve dynamics, but the fact that we haven't done that in over a decade is concerning. The market reacted today. To me, you take a trade war at least and push it out or take it off the table or give you encouragement that global growth could actually get a boost, and you see this happen to the bond market, it tells me that the market is telling you that we're already concerned about global growth, and this is too little, too late.
I think they sold. I'm sorry. I think they sold the shorter term maturities based on risk on.
Risk on,
point, and then the longer term because they based that off of the Fed moving closer to neutral.
Right.
So that was why that's a problem for the overall market. Twos, tens, threes, fives. That's a problem.
Right, and that chart that we just showed is a pretty ugly chart in terms of the 2s-10 spread. I mean, when you get to a point where it's 14,
it's the lowest in 11 and a half years.
Right, Karen, it's not good for financials. We saw that in today's action in terms of financials sitting out the rally pretty much, and so did regional banks. I mean, that's got to be concerned.
I don't know. I think that might be a little bit more of a technical thing than necessarily an indictment on the economy, although I thought that today, as the market opened much stronger, obviously, and as it became clearer, I think you tweeted something very early this morning that there's a little bit of fuzziness around what the details are. In fact, I didn't know that the 90 days started in January 1 until today.
Right.
We didn't know that over the weekend. So that doesn't give me a whole lot of confidence that they've really made a great deal of progress.
Right.
But,
the auto tariffs, for one, I mean, there's a difference between the Chinese will roll back probably entirely the auto tariffs versus there actually is no agreement on auto tariffs. I mean, there could be two farther, positions on that one issue.
Not only that, look, tariffs remain. And I realize that 10 is not 25, but 10% tariffs and the acrimony that we have and the way this has actually led to, at least a pushback on trade around the world leaves us to a place where, again, we've got a job number on Friday and we've had a Fed that's dialed back the rhetoric. I would argue that was the bigger part of this move. And we're up 10% on the triple Qs off the lows. Semis have gone up almost 11%. So you've had a very nice move in a short amount of time.
Let me add one more thing.
Yeah.
Uncertainty remains. You
Right.
know, it's not certainty, even if it's bad, can give you some floor.
Right.
We're still in a very uncertain period here.
And if one of the concerns in terms of the economic data that we've gotten out so far is a slowdown in CapEx spending, for instance, do you think that there's going to be any more certainty to enable companies to say, yeah, I'm going to spend on that factory, I'm going to spend on this plant, whatever it is, hire these people? We're in the same position as we were 48 hours ago.
Not for the next 3 months, at least, right?
Yeah, that's true.
So effectively 4 months.
Yeah.
That's correct, because it
That's
starts
true.
in January. So no, the short answer is, but none of us, I don't think any of us thought last week there was going to be anything substantive come out of this. We all said that the optics of it would get a market rally on Monday, and here we are. Again, I thought the rally that we saw overnight and early this morning would hold. It didn't. I don't know what it means. Maybe a lot of the rally was taken up on Thursday and Friday ahead of this. With that said, now you have a Fed that's probably backing off a little. Whether we're reading it rightly or wrongly doesn't matter. That's what the market's interpretation is. And now you're giving yourself 3 months. So the seasonality that December brings, maybe some pitfalls, but we probably close the month higher.